All right, we're back with you as we keep a close eye on how our markets are performing early in our trading week and month. I'm Marlin Bohling with you, your tour guide to the ag commodities. And let's go ahead and dive into these prices. And on the corn market, my goodness, corn is starting to act pretty impressive today. We have the December contract at 5.74 3/4. So after kind of a meager start, we're now 6 1/4 cents higher on the day. And we have May now up 7 1/4 cents. So 5.74 1/2 would put us 2 cents from our high of the early morning trade. Now on soybeans, and by the way, I'll mention we had 132,000 tons of soybeans sold to China over the weekend. It started out absolutely unchanged, and now we're starting to get a little bit of momentum here. November soybeans now 4 higher at 12.39 3/4. January 3 higher at 12.52 1/2. Remember, November is now in delivery mode. Well, let's see what's going on in wheat. Wheat had a lot of excitement overnight. I'd say this still qualifies. December Chicago wheat 21 higher at 7.93 3/4, only one tick from our high of the morning trade here so far. And if we go to the Kansas City market, you have December 17 higher at 8.02 3/4, couple of ticks off of its high of the day. Let's go to Minneapolis wheat. And right now, December up 18 cents at 10.70 1/4. In the cotton market on December new crop, well, we have it trading at 118.24. Wow, up 339 points on the day. Overnight, we actually got as high as 119. Goodness sakes. So here we go again. Let's welcome Chris Swift of Swift Trading in Nashville. He's here in-house, in studio with us. Good morning.
Good morning.
Interesting day as we have liftoff in some of the grain markets here. And crop markets. Let's talk about this here for a little bit. What do you see in this grain market right now? For example, in the corn. What is it lifting the corn up when we're in the middle of harvest yet? What's driving it?
I think there's a multitude of factors out there working on it, with the biggest one being fertilizer. So everybody says, well, right now we got a 15 billion bushel crop and that's ample plenty, but what is next year going to look like? And then what's the year after that going to look like? So already we're hearing stories we're going to be shorter of acres of corn coming into the 22 season. If the drought were to increase a little bit, the fertilizer prices start to hamper and something like that, then we have to think, well, that's going to hamper corn usage all the way up to July of 23. So this is not just a very front-end aspect of the market that's going to be relieved anytime soon. It looks more like we could get more pressure into the market as we go forward.
But wouldn't that affect next year's crop, the red December,
and it
more
is.
than it would the current December?
Well, and it is. If you look, those prices are nearly together. We historically would see somewhere between a 30 to a 50 cent difference between those two prices, and they're literally the same price.
This kind of puts pressure on South America now to really come through with some production, and the odds are kind of stacked against it, aren't
well,
they?
They do because of the drought out there, but look at Chinese pork production again. It's already back up to the numbers that they thought pre-African swine fever, and now they're all under a controlled environment being fed a clean feed source. That's going to continue on for years and years on down to have that need for a clean feed source.
Are you a fan of the wheat market right now?
I like it very much so,
Still?
but it's always been Minneapolis spring wheat, just simply because of the same situation that is in it could be a year from now in the corn market.
Really?
Yeah, what you're looking at now is you just had a complete crop failure this year in the Minneapolis wheat, and although it's bad right now, what's it going to be like in the summer of 22? You still don't have another crop until we get probably the fall of 22 in that Minneapolis spring wheat.
I want to bring up the oats market here, just because I like to. It is something to behold. Look at December oats today, 18 1/4 higher at 7.48. Look at them go. Yeah. All right, we'll pause right here. Chris, we'll come back and we'll take a look at our livestock trade in just a moment. We're back with Chris Swift of Swift Trading. He's based in Nashville. Overall, what do you think of the cattle market? We had a higher cash cattle trade last week. Is it the right time of year to do that or not? What do you think?
You know, from a seasonal standpoint, we usually kind of trend a little bit lower, but we haven't matched with the seasonal tendencies for a long time now. So I'm pretty friendly towards the cattle market now. We've had a lot of glitches to happen in our packing facilities, and now we seem to be getting some of those straightened out. We had a huge kill last week, 668,000 head. We're getting ready for the fall of the year where that rib season comes in, and we'll see a little bit better movement from the grocery stores, the Costco's, the Walmarts. I think they're going to stack up. You'll see more people have more of the holiday meals and stuff that are exclusive of ham and turkey, and so you want that rib roast, and I think that's where we're headed for.
All right, can I offer an observation
Sure.
from last week?
Yes.
I was in a so-called big box store or big retailer last week getting some things, and I noticed that it's starting to look a little eerily similar to some of the shortages that we had last winter, last spring.
Yes.
You go in there and a lot of paper products were gone, and they're getting a little bit sparse right now. And I remember back then, that was when you started having shortages of meat showing up on the counter, remember?
Right, I do.
You couldn't hardly find it. I remember people were lining up buying it right off the truck when it came in to the store. Is that possible to do that again?
Yes, because it's not a problem with a shortage of the product. It's trucking. It's distribution. That's what I hear from everybody under the sun is trucking prices have gone up. Distribution channels are all clogged. We can't get back hauls, which is a really big problem for a trucker. You're only hauling one way, so it's tough to get a back haul coming back to wherever your location is. And we don't see governments doing anything that's going to resolve that. We don't see them making the hard decisions it's going to take. We know this may not be the right thing for the time being, but we're going to eliminate certain factors that allows the free movement of product. And then we'll go back, once we get this cleared up, then we'll go back to whatever mandates they want or city ordinances to keep you from stacking empty containers too high. Anything like that.
Let's look at the prices then, and excuse me, on the live cattle right now. Well, Chris, we're higher across the board. The leader would be February, up 47 cents. We're at 134.70. Nearby December, it's up 17 cents. Not overly exciting right now. On the feeder cattle trade, you currently have the January down 77 at 155.35. Now, this morning, it had been higher, but it's starting to fall apart a little bit. Is that because the corn is surging, do you think?
I think so.
Okay.
The feed cost margins they're tight to begin with, so anytime you get feed costs to ratchet up 40, 50 cents, that begins to impact the feeder cattle. And the feeder cattle market got hit pretty hard last week on the future side. It narrowed the basis, and if we look at where the index is right now, we've pretty much converged to an even basis now.
Makes sense. All right, on the lean hogs, here we go. Well, we're higher on the nearbys. December 30 higher at 76.37. The far out deferreds are kind of mixed, but mainly higher. So that's how the hogs are setting up so far this morning. Good to have you in. Thank you.
Always a pleasure.
Appreciate it, Chris. Chris Swift of Swift Trading in Nashville. Tammy, back to you.